Hello everyone, welcome to BISP Solutions. BISP Solutions is a tech company that provides technical solutions across the world. So today we will be moving ahead in our financial modeling understanding. So in our previous session we learned about simplification, goal seek function, data table, scenario analysis, scenario manager, data validation, protecting cells and sheet. So we will take 5 to 10 minutes in reiteration of previous session learning. So starting with why simplification in FM is required, which is financial modeling. So simplification in financial modeling is important because it helps making the model easy to understand, use and maintain. Then it is a simple model, clearly shows the relationship between inputs and outputs, which making it easier for users to test assumptions and make decisions about it. Also, complex models can lead to confusion, errors and wrong conclusion, and by focusing on key drivers and avoiding unnecessary details, simplification saves time and helps communicating results clearly to stakeholders who may not have a finance background. Also, it is a clean and simple model which is also used for easier updating and auditing, ensuring accuracy and reliability over the time. So we go ahead with our simplification. So we have discussed about our simplification of first, like if we are having risk-free rate 4% and the data is given to us like this, so if we want to calculate it, so without using this method of calculating one on one and neither calculating it like this by selling, we have to use our name function or name formula, where we will be selecting whole data, and with the use of Alt we will be getting our shortcuts in this black one, and then clicking on M. Then from name manager we will be selecting our create from selection and clicking on C. Here we can see the left column is selected, we don't have to change it, and then clicked on OK. And whenever we want to enter any particular formula, we just have to write down the risk-free rate, so it will be giving us this particular formula. So let's suppose I want risk-free rate, so it will be showing me like this, like our formulas show in Excel sheet, like that we will be getting in our risk-free rate things, or these data will be coming under this particular thing only. So this is how we can use name formulas. Then coming to our simplification of second, where we have selected the same name manager to calculate this particular ERP. Then if we want to calculate cost of equity, then we have to select both the data, and we have to maintain this records in name manager. Like this only we will be doing our formula. So first is our normal students which use this kind of data. Second is our rough data which we use by selecting sellings. This we have understood about in our first simplification, like using name function. If an expert is doing this formula, using this formula, so he will use only 4 things which will calculate cost of capital for him. So he will be using this cost of equity, post tax of cost of debt, equity funding, debt funding, and then he will be calculating cost of capital. Whether you use these formula or use this answer will be coming same. Coming to our simplification of third, where we have our debt to equity ratio, which is 25%. Coupon rate we have to calculate, where we will be using nested if else. Nested if is if we are using more than 2 or more than 1 if, so it will be coming under nested if. So here I will be using these sellings for getting my answer of coupon rate. If I want to use VLOOKUP function, so I will be using VLOOKUP and will be selecting as per the formula demands, and I will be selecting 1 for approximate match, and if I use 0, which is true, so I want a fixed number, so I will not be getting, it will show me the error on the same thing. Then coming to our advanced simplification, where I will be taking goal seek function, which will be used in financial modeling. So in this I have data of current sales, sales growth and gross margin, and if I am having next year sales like this and cost of sales like this and gross profit is this. So if I want my profit to be like this, 19,570, so I have to again, if my cursor is on home, so I have to click on alt, then I have to go to my data, which is A, and what if analysis is W, and my goal seek is G. So I will be selecting cell where I want to see is this, to value is 19,570, and I want to change my sales growth. So if I press OK, so my sales growth will be changing, and if I click on OK, my actual data will be hampered. So like this we can calculate our goal seek in financial modeling. Then coming to our data table, where I have taken my gross profit here, and I have my sales growth for 10%. So if I want to calculate it for different percentage, so I have taken 8%, then 10%, and I have increased it by 2% each. So if I want to calculate it, so I have to select whole the data, and then I have to click on alt A, W and T. So it will be showing me the row input cell. I don't have row input cell, so I have column input cell, which is gross profit. So my and then clicking on OK, it will be turning my gross profit according to my 10%, and it will show me this data. Then coming to my scenario analysis, where I have the same data which I have in goal seek and data table. So I have to calculate this gross margin. So I have taken sales growth as this, as similar as data table, and here I have selected gross margin from 40 to 90. I have increased 10% each. So if I want to see the gross margin or different sales growth at different gross margin, so I have to select this both, the gross margin and sales growth. Then I have to click on alt A, W and again data table. There I am having row input cell, where I am having rows is sales growth, and column I am having gross margin. So I have to select this and then OK. So it is showing me different things. So if I select what if analysis again and data table, where I have sales growth and just a second, and then clicking on OK, it will be showing me the data. So like this we can calculate it in our scenario analysis. If we want to see base case, worst case and best case, so we will be going to our scenario manager, where I have the same data which we have used in our previous formulas. So again what we will be doing, we will be having this data, then again Alt A W, and first option is our scenario manager. I will be clicking on S. So I have prepared base case, worst case and best case. Base case means where I have given my scenario name as base case, and I have to change these 3 cells. So if I click on OK, it will show me the base case. Base case is, this is my base, this is my already known data. So I have provided this base case and clicked on OK. Worst case, if I want to see that, I have given scenario name as worst case, and I have selected cells which needs to be changed are these, and then I will be clicking on OK. After that it will show me what you need to change. So I have decreased the current sales with 1000, and I have decreased the sales growth also by 7%, and also I have decreased the gross margin. In my worst situation I have given 50%, and then given OK. Then my best case should be the same. I have increased 1000 over here. My current sales growth is increasing by 5%, and also my gross margin is also increasing by 10%. This is my best case. I want these 3 cases with different gross margin and sales growth, and I want my summary over here. So I will be clicking on summary option. It will be giving us scenario summary. So it will show us the result cell automatically, like we want to see these 3. So once we click on OK, it will show us the scenario summary in our next tab, and it will be showing us this current values where base case, worst case, best case is there, and result cells they will be providing us. Like this we can do our scenario analysis. Then scenario manager, scenario analysis is done. Then coming to our data validation. So if I want to increase my gross margin by 110%, it will be showing me a warning sign. Okay, so why it is showing to me? If I want to see, so I will be going to Alt A and V, data validation, and again V. So it will be showing me a dialog box where data validation is there. So coming to our settings, I will be selecting decimal, and I have already got this data between, and I have selected 0 is my minimum and maximum is my 1.0. Then I want to input message, like if someone wants to change it. So input message should be, please note gross margin is profit left after cost of sales should be less than 100%, and error alert if anyone wants to change. So show warning sign. So warning sign is, you have input incorrect gross margin, it should be less than 100%, please recheck, and we will be clicking on OK. So it will be showing us this small dialog box where note is there. We can use comment option also, but it will not show or will look good in our, whenever we will be sending our financial statements or financial modeling to our upper management. So we will be using this data validation use. So if suppose I write 120% over here, and it will be showing me this warning sign, and I will continue it by saying yes, so it will be changing these things. So if I want to see what I did wrong, so again I will be clicking on Alt A V, and it is showing me the second option, like circle invalid data. Then clicking on I, and it will show me by red. I will be getting this is the wrong thing I have done. So again I will be clicking on 100. It will not show me any error. I will be doing 70%, it will not be showing me error. If I do 110, it will show me them. So again calculating it with 60% only. Then coming to our protecting cell or sheet. So if I want to protect this data to be hampered, and I don't want anyone doing anything with my formulas, so I will be selecting my whole data and will be coming to review section. So for that, Alt R, and here we will be seeing protect sheet. So we will be typing PS. It is showing us what you want to protect. I told my Excel to select locked cells, and already it is having this tick mark, select unlocked cells also. Okay, and once I click on OK, I can't change anything in my formula, but I can change it over here, and it will be changing on its own. But if I want to change it, I won't make it. So this much we have covered in our previous sessions. So today we will be learning about ratio analysis and types of ratios which are in financial modeling. Example of ratio by taking company's data. So first of all, we will be understanding about ratio. What is a ratio analysis? So it is a way to understand the performance and health of a business using numbers from its financial statements like balance sheet and income statement. So types of ratio analysis are financial ratios are profitability ratios, where we measure how well the company generates profit. So first of all, we will be learning about gross profit margin, where gross profit upon revenue is there. Then operating margin, where operating income upon revenue we will be studying. Net profit margin, where net income upon revenue is there. Net profit margin is completed. Then return on assets, which is ROA, is calculated through net income upon total assets. Return on equity, which is ROE, which is calculated through net income upon shareholders equity. Next is our liquidity ratio, where it shows the company's ability to pay short-term debts, where current ratio is there, which will be calculated through current assets upon current liabilities. Solvency ratio, where we will be measuring long-term financial stability. It will be done through debt to equity ratio, which we have learned in our previous session also. So to calculate that, we have to total our liabilities upon shareholders equity. So how it is used in our financial modeling? So these ratios help evaluating the past performance of the company. Then they help forecasting future financial performance, and ratios are used to assess if the company is a good investment or not. So for that, First of all, we will be understanding how to make financial statement in financial modeling. So I have taken here Tata Motors financial statement, but if you all want to download Excel or quarterly data or any data, so from apart from hypothetical data, if we want to go to our more deeper in companies data, so what we will do, I will do come to my screener.in, where we will be finding our companies data, where let's suppose Tata Motors. Once I clicked on Tata Motors, I will be getting every single thing over here, and coming down it will be showing me the annual reports of 2024. I have taken financial year 2021, so it is from BSE only, and I have downloaded this particular data, and also I have downloaded this export to Excel data also, and I have taken it in this format. Okay, so it is showing me the company name and latest version and current version, and it is showing this particular thing. Keep in mind, this is in our crores. So here in their financial statements, they have told us, please do not make any changes to this sheet, because this is the data where we will be calculating our financial statements, or we will be creating our financial statements, so we will not be hampering them. I have just provided a note over here that this all data which we have here are in crores. So if we want to calculate it, so we will be using our previous sessions learnings, like how to do this margin center, and how to do this highlighting part, and all the things, and income statements, and I have already calculated it here over here from this data sheet. I have taken all the data, and over here I have recorded it in the form of if error, because if there's any changes over here, so it will be changed on its own. So for that I have clicked on if error, and I have selected the data sheet from this, and I have given 0 so that my data will be done. I have given I have dragged the same thing till LTM. LTM is last 12 months data I will be giving over here. So once I dragged it from this to this, it will be having all the formulas in it. Then I have to calculate sales growth. I don't have sales growth over here, so for calculating it I have done this upon this -1, and then I clicked on enter, and the same will be dragged over here. Like this only I have copied COGS, gross profit, selling and expenses from the data sheet which we have of our company. We will not be hampering this data. We have made our data, and for that we will be calculating our sales and general expenses percentage of sales, and we will be dragging the same. Then we will be calculating EBI, DDA, and interest, and depreciation, earnings before taxes, tax. Like this we will be calculating according to the data sheet which we have got over here, and we will be doing modifications by doing this growth percentage by calculating these things. And after that our profit and loss statement is made. So from that only we have made income statement. Then coming to downside, we have our quarter ending data with us. So for that we have calculated according to this particular, we have calculated from the data we are having of balance sheet. I have copied from this to this. It will be coming under the same formula bar of if error, and it will be, we will be dragging the same to till this, because we have applied one formula, and then we will be dragging again to right side. Then all the things which we have over here we have calculated as per the head's demand. Like total liabilities we have to see how much are there, and fixed assets, for that we have to calculate total non-current asset. If I want to modify it more, so what I will do, I will come to my total liabilities and clicked on shift, and I will be doing this formatting, and control +1. There I will be going to my borders. I want borders on my downside and this side. Okay, and here we can see the borders are made. So you all can do it through F4 only. So again control +1, control +1, again this and this. Okay, and it will show our data more precisely and more nicely. Then again this and this. For checking, we will be doing this is equals to this, then it will show us true. Whatever we have learned in our previous sessions, it will be used in this particular things which we will be doing. Then comes our cash flow statements. Cash flow data, we have taken it from the same this side only, and it is showing us profit and loss, balance sheet. Here we have our all the data of cash flow. What we have to do, we have to do a copy paste, which I have done over here, and all the data will be as simple copy paste it over here without any formatting. So I have given cash flow data tab over here so that I can put my cash flow statement here of Tata Motors, and to calculate it I have given different heads where we will be doing operating activities, investing activities, financing activities, and then we will be calculating our net cash flow. So I have calculated it through operating expenses, which is we will be differentiating our data like in operating activities we will be getting profit from operations, receivables, inventory, payables, loan advances, other WC items, working capital items, working capital changes, direct taxes. So these will be calculated, and after that we will be getting cash from operating activities total, and then investing activities. So from investing activities, what are the data which we have to use for investing activities? We will be having this particular data from this cash flow data only, and then we will be calculating our investing activities data. Then coming to our financing activities, where all the financing activities from where proceeds from shares, redemption of debentures, borrowings, repayment of borrowings, proceeds from deposit, interest paid, and etc. will be coming under financing activities. So we will be calculating our cash from financing activities. After that we will be doing if error, and if we want to calculate our net cash flow, so we will be adding this cash from operating activities, cash from investing activities, and cash from financing activities, and then giving comma and 0, it will be showing us minus. And like that only we will be dragging this formula till last, and it will make our cash flow as simple as that. So this is how we make financial statements of our Tata Motors, or you can take any company whichever is most used by you, or most preferably you will use. So you can take it by screener.in site, and you can make income statement with that, and cash flow statement, balance sheet, and you can design your financial model too. So this is what our financial statement looks like while we make it through the data of company. Then coming to our ratio analysis, so whatever we had made in our financial statement, it will be copy pasted here as it is, with the formatting formulas. We want every single thing with formulas. Coming to our ratio analysis, so I want to calculate sales growth. I have given this much data for calculating my ratios. So what I will do, I have selected this sales growth is there, so for that I will be going to my if error and selecting from historical IFS. The sales growth is nil, so I will be taking it from this particular, and this sales growth is 23.33%. so exactly the same thing will be copy pasted till the end, which is last 12 months. Like this only we will be selecting from EBITDA growth. So for that, if we want to see EBITDA growth margin is this, and this is our EBITDA. So for that we will be deducting -1 and then 0, and it will be showing us this particular answer. Like this we have dragged our formula till the end. Like the same we will be doing to our every single head over here. So keep in mind that we have to use these three shortcuts for our data getting percentage or decimal value, or if we want to select our data in one go, so for that we have to use these three types of shortcut keys. So these are important, so that's why I have mentioned it in red. Then come our gross margin. So for gross margin we will be getting our this, where C13, if we want to see, C13 is our gross profit, so it will be the same, and then it will be dragged to the last. Then EBI TDA margin, it will be like this. EBI TDA margin is this and 0, and it will be dragged like this. Then EBIT margin, it will be same, but we have to divide C24 by C6. It means C24 this by sales, then only we will be getting EBIT margin. Like this we can calculate our EBT margin, and for net profit margin we have to go to our historical IFS, and coming down, net profit margin is 5.12. again it will be the same. Then we will be dragging this, like suppose we have calculated for this, and I haven't typed this. Okay, so I have selected this copy, and I have selected shift, and then pasted the same, and it will be automatically calculated. Like this only we will be doing our sales expense percentage sales, where we will be calculating it through this historical IFS, and we will be dragging this till the end. If we want to calculate our return on capital employed, for that we have to select our depreciation, and we will be dividing it by sum of these three things, because it is directly equals to owner's capital. So for that we will be dragging the same formula till the end. Then the same, whatever retained earnings we are having over here, it will be given us till the end. So this particular 4 to 5 things are required, because it will see the health of the company. Okay, so it is very necessary to check whether our company is healthy or not. Okay, so in many sessions I have told you all about EBITDA. So what is that? So actually EBT is earnings before tax, EBIT is earnings before interest and taxes, and EBITDA is earnings before interest and taxes and depreciation and amortization. So formulas are different for all the three: EBT, EBIT, EBITDA. Operational insight: EBT insight into profitability before tax. EBIT is view of operating profitability excluding financing cost. EBITDA is rough measure of cash flow by adding back depreciation and amortization to EBIT. Distance from net income, which means close to net income excluding only taxes, is EBT. EBIT is excludes effects of financing and taxes from operating profitability. And EBITDA, which excludes effects of depreciation and amortization from EBIT. Uses and application of EBT is analyzing profitability and tax strategy, And for EBIT, it is operating analysis, valuation, and company comparison. EBITDA is valuation, investor analysis, and company comparison is there. Taxation and financing, it is for highlighting impact of taxation, not financing, on total earnings. And for EBIT, it ignores taxes and financing impacts, focusing on operating earnings. And EBITDA is ignoring impact of taxation, financing, depreciation, and amortization on operating earnings. Then key formulas using these matrices for EBT is net income is equals to EBT minus taxes. Effective tax rate, if we want to calculate, so for that we will be calculating it by taxes upon EBT, which will be multiplied by 100. And if we want to see what is pre-tax earnings yield, so for that we will be calculating it through EBT by market capitalization. For EBIT, we will be calculating it through interest coverage ratio, where EBIT upon interest expenses there. And for return on capital employed, to calculate that, we have to select EBIT upon total assets minus current liabilities. And EBITDA, for that we have to calculate EBITDA margin. For that, EBITDA upon revenue into 100 is calculated. If we want to calculate EV to EBITDA, for that enterprise value upon EBITDA is the formula. And free cash flow we want to calculate, for that we have to calculate it by EBITDA minus capex minus change in net working capital minus taxes. So for that, EBIT, EBT, EBITDA is used. If we want to see what is EPS, which is earning per share, where it's a key metric that tells us how much profit a company is making per share of stock. So this much is clear to you all about our ratio analysis. Coming to our next, which is our turnover ratios. So if we want to calculate our debtor turnover ratio, so for that we have to select our, again we will be going to our historical IFS, which is important financial statement which we have made for our ratio analysis. So we will be going to our C6, which is this, and we will be dividing it by receivables. Then we will be getting our this particular answer, like this creditor turnover ratio, where we will be again going to our sales upon other current liabilities, and then we will be getting our this answer. If we want to calculate our inventory turnover ratio, we will again go to our sales divided by inventory, which is this, and our calculation is done. So like this only, if we want to calculate our fixed assets turnover ratio, again we will be going to our sales divided by fixed assets we can take it as this and 0, and again it is showing us this. If we want to do formatting, so we have to select this copy and this Control Alt plus V, we have to copy the format, and again selecting copy and through shift, and this is how we can use this ratio analysis. So to conclude, financial modeling is both an art and a science, one that demands precision, structured thinking, and a strong grasp of business fundamentals. So while the learning curve may be steep, the payoff is immense. So it empowers professionals to make informed, data-driven decisions that add real value to businesses. So Thank you all for joining today's session. I hope it offered clarity and insight into the complexities and importance of financial modeling. So keep practicing, stay curious, and continue refining your analytical skills. So if you have further questions or would like to explore this topic deeper, feel free to reach out or connect after the session. Until then, happy modeling and all the best in the professional journey.